In FM, we are having total chapters over here 21. Is it clear? Now, in that few chapters, I'm not going to count. So, you're not going to count means we are going to only discuss the chapter, reason being theory, and only important is that you already know many topics from that. It's like little bit of economics topics are there. So we will discuss that later on. But for me, I'm not even counting that chapter. Is it clear? This does not mean that they are not important. Everything is important for the exam point of view. Okay. So if I say which chapters I'm not counting, that are chapter number 1. See, I've already marked in blue. Chapter number 11 and 12. Then we have chapter number 21. So these four chapters technically are not chapters for me. Is it clear? And we will discuss this later on as in time path. Now, if you see chapter number 2, chapter number 3, chapter number 4 are, you can say, a single chapter. Is it clear? Means from chapter you can say up to 6. They are a single type of chapter. Okay. Now, why I'm saying like this? It is given over here, na, chapter wise. Technically, they are part of a single concept only. So from chapter number 2, chapter number 6, I can say that this is a single chapter for us. Is it clear? Then from chapter number 7 till chapter number 10, again, this is a second section for us. After that, foreign exchange risk, interest rate risk are altogether different thing. Then source of finance, dividend policy, cost of capital, and capital structure. So from here, this I can say that are single branch. Am I clear with this, everyone? 13, 14, and 19, 20 are independent chapters. Okay. So let us start with directly with chapter number 2. Am I clear with this, everyone? Can we start? Okay. And be quick in giving response. You can keep your mic on unmute also if you want. And wherever you feel, you can just contribute. No problem with this. Okay. Sure. Before starting with this, yeah, screen is lagging. Just a second. Okay. So before starting, let us have a little bit introduction about this topic. What is financial management? What do you mean by this? Screen is lagging, so I'm connecting again. Give me a second. Management of funds. Okay. Effective and efficient management of funds. Okay. So this is just in similar answer as Ayushi has given. Don't know why screen is not getting connected. Yeah. Okay. So meanwhile, tell me in how many ways business can raise funds? Is in how many ways companies can raise funds? Just connecting the screen through wire. By the way. Yeah. So I got answers here, equity and debt. Then in that we have bonds. Then you told me that retained earning. Okay. Don't know why screen is not getting connected. Even I'm connecting through wire. Yeah. Now screen is visible. Yes. Is the screen visible now? Okay. So financial management. Okay. So company required funds. Now what is the use of these funds? It can be raised in two ways. One is your equity. Then another one is your debt. So we have basic two things in which money can be raised. So any difference between these bonds and what do you say, equity? Yeah, what is the difference between bond and equity? Oh, sorry, equity and debt. Just give me a second. Yeah, equity denotes ownership, whereas debt is a equity is more riskier than debt. No, it's opposite. Okay, you can say, yeah, in terms of investment point of view. Okay, Ayushi, I got your point. Risk, okay. Debt is loan capital. Okay. So if any company wants to raise money, and if this money is raised, you can say through equity purpose, means here you have to sell your ownership. Sell your ownership means sell company ownership. Am I clear? But in debt, what happened? Interest has to be paid. Correct? So in this, you have to pay interest. Am I clear? Is this clear, everyone? Okay. Now, what this topic all about? Basic investment appraisal technique. If you see the connecting chapters which we are going to study, chapter number 2, 3, 4, whatever it is, we are going to only study this. Okay, I just forgot to ask you, is it English is fine or should I explain you in Hindi as you say, how you're comfortable? Yes, can I get the answers? Yes, English is fine. Okay. So now, what we are going to learn in this basic investment appraisal technique. So this in this chapter we have basic. Clear? So what type of technique we are going to learn and what do you mean by appraisal technique? Appraisal means whether what investment we have done in a company, should we accept it? Like for example, today I'm investing 1 lakh dollar in a company. Okay, I have done investment 1 lakh dollar in a company. So how I will come to know that should I keep this investment in the company or should I sell it? Is it your book my profit or loss, whatever it meant? So how should I take the decision? So for that, we required various things. Like for example, if I say my requirement is that I should earn 10% on this. 10% means how much? 10% means how much? $10,000. So my intention was to earn only $10,000. So my investment is fruitful, correct? Yes or no? Yes. Okay. So now what type of things we need to understand? And whatever we are going to learn this topic, it will be applicable in all the chapters we are going to cover up in this particular section. So investment appraisal technique, number one, accounting profits and cash flow and relevant cost for us. And first two technique which we are learning, that is number one, ROCE. Then second one is payback. Second one is payback. So let us start with, first of all, what is this investment appraisal process all about? One stage in the capital budgeting process is investment appraisal. So when we are into the budgeting part, so what do you mean by capital budgeting? The word capital budgeting means, yes, what do you mean by this word capital budgeting? Like budget. What is budget? Like planning. So here we are going to do planning of what? Capital. Capital means amount which is amount which is invested in business. Is it clear? So how to ration it? Ration it means uh, how to use it, because capital is limited. Now you cannot fund n number of business. You cannot fund n number of business. You can we know that this section is also profitable. That section is also profitable, but we have limited money. You cannot invest all the money in a single project because money requirement is there for all different departments of your company. So how you're going to use that? How you're going to give the ranking, that we need to understand. So one stage in the capital budgeting process is investment appraisal. This appraisal has the following features. That is assessment of the level of expected returns earned for the level of expenditure made. So now what is this? Assessment of level of expected returns. That is how much you want money out of your investment. Say I need 10%. Now some want 20%. For them 10% won't be enough. Is it clear? So if I am taking risk today by investing this money, and how much is my cup of tea, means how much risk I can take. That is most important. Is it clear? Now, how you will come to know how these things are there, how you will come to know and how you evaluate. First of all, estimate future cost and benefits over the project life. This thing will be done by, for example, if today I'm investing in a project and I know that I have to take a loan. If I am taking a loan, 10% is the interest. So for example, 10 rupees is the interest. So technically I have to earn more than my cost. Then only this my investment will be fruitful to me. Yes or no? Is it correct? If I'm investing somewhere and I know 10 is my interest cost. So I have to earn more than that interest cost. Correct? Yes, I've already taught you people. I know you are very active students. Yes or no? Okay, correct. So how we are going to evaluate two things, ROCE and payback. So let us start with the first one. We have two formulas over here for this thing. ROCE, annual average profit before interest and tax upon initial capital cost. For that, we have two things. How you're going to find out this? If you see this in this two formula, numerator is same. Numerator is same. So technically, we are having two methods, you can say initial cost, capital cost, or you can say average capital investment. How you will get average capital investment? By this formula. That is initial investment plus scrap value. So just you can evaluate this formula. Once done, let me know. We can start with question answers then. Yes, can we start? Can we start with this first question? Okay. So see, FM is all about what we say, solutions and taking decisions. So first of all, you tell me, what is your expectation? Is what after learning FM, what you thought that what will be there in this exam? Means in this paper, is it theory or is it MCQ? What kind of this paper is all about? MCQ plus theory, okay. No practical? Practical, okay. Correct. So this, if I say, this is more of analytical subject. Like skills has to be developed. Like we are going to learn many things in this. So how we are going to evaluate the question answers in terms of which concepts will be applied over there. Okay. So that we have to look over here. So before starting, one thing I want to ask you, are the FR which I taught you, have anyone cleared or what is the status? Have you given your attempt?
Yes, sir. So just waiting for the result.
Acha. So how many students have given? Yes, Vidhi just replied.
Some me and Khushi Mali.
Acha, two students has given. Okay. Yeah. And when you are planning to give FR then? Oh, sorry, FM. You're going to give in December, I guess.
Yes, sir.
Okay, so you have ample of time. So now let's start. Our project involves the immediate purchase of an item of plant costing $1,10,000, and it would generate annual cash flow of 24,400 for 5 years. Starting in the year number one, the plant would have a scrap value of $10,000 when the project terminates. So what is given to you in this question? You are investing in this company, means in this project technically, where you have an investment of $1,10,000 and scrap value is given to you. So first of all, can we calculate depreciation from this? Can you just calculate depreciation from this information and give me? Yeah. So cost of asset is how much? Correct? Scrap value is given to you. So depreciation will be cost of asset minus scrap value divided by number of years. Just give me the answer. What is the depreciation for this? 20,000, correct. $20,000 is the depreciation for us. Now, how much is the cash flow for us? Annual cash inflow is how much? 24,400. So we have been provided with next set of information, that is average annual profit. So how I will get this? My profit is how much? Total cash flow is how much? 24,400. From this, I will subtract $20,000. Why? Because this is a depreciation of, means whatever I'm going to earn, from that I'm going to spend. Is it clear? Because this is profit, from that I have to remove the depreciation. So then I will get my average annual profit. Because annually, how much profit I am making? Till here, everything is fine. Okay, correct. So let's move forward now. What was our formula? We are solving by which method? Initial cost method. So what is the numerator for us? Average annual profit before interest and tax. So ROCE is equal to average annual profit upon initial average cost. So how much is the average profit for us? $4,400. And how much is the initial cost for us? How much money we have invested in this project? Correct. 1,10,000. So just multiply it. How much it will, you will get a final answer. What is the rate then? 4%. Correct. So this is the ROC, means if we are investing in this project, we are getting return, how much return on capital employed. And the money which we have invested on that, we are getting how much? 4% I am getting. Till here, everything is fine. Okay. So can we start with the second method now? Is it the entire solution clear for you? Okay. So let's start with second one. The second method is what? Average capital investment. So we are going to solve by capital method. So if you see numerator and denominator, numerator is same for both. So we need to find average capital investment. So how we will find out? For that, we have this formula. That is initial investment plus scrap value divided by 2. So let us solve this first. Using average capital investment. So average book value, average capital investment is equal to, I will have initial cost plus final scrap value divided by 2. So how much is the initial cost? Scrap value, you have already given me the answer. Divide by 2. Just solve this. Clear? $60,000. Chal. Am I clear with this? Okay. So what is our formula for ROCE? Average annual profit divided by average capital investment. So how much is the average capital annual profit, which we have already solved in the last question? This one. Correct? Should I take this figure there? Yes, should I take this figure there? Yes or no? Average annual profit. So that is how much? $4,400. And average capital investment, just now I have find out $60,000. Just calculate now what will be the final answer for us. 7.33%. I hope this is clear for you now. Can we start with the next question then? Okay. Sure. Can you try with this question by yourself? Acha, just tell me what is the difference between the earlier question and in this question. What is the difference between? See, we have to find the same things. Same. Yes, I'm asking you. Profit is changing. Means inflow. Here, what inflow we had? We had annual cash flow was given to us, average annual cash flow. So correctly here, we have to take average. So we have to first of all add all this. How will find average cash flow? So you will add all this thing. That is 100, 200, 400. So now tell me what is average annual profit then? One seven five zero 250K. Okay, acha, total answer. Okay, 1750. Correct. Divide by 7 if you do 250, and I'm adding 3 zeros now. Correct? Yes, both all answers are correct. Clear? Now after this you can solve further. You need to remove average annual profit now. So for that we require average annual depreciation. So tell me how we will calculate this depreciation then. Is how we will calculate average depreciation then. Yes, correct. So annual depreciation, how you're going to take it? Actual investment done in the business for that particularly initial investment. From that, subtract scrap value which is there, that is $1 lakh, and divide by useful life because this project is for how many years? 7 years. This project is going to be there. So you will get how much average profit? Correctly given answer. $8 lakh minus 1 lakh divide by, yes, divide by 7. So that will give you answer as $1 lakh. Now tell me what is annual average profit then? What is average annual profit then? 150K. How you got this? Yes, how you got this? That is the actual profit which we have derived here. Minus, correct. That is depreciation average inflow. So you got answer as 1 lakh 50. So can we start and solve with first formula? We have all the information for first formula for ROCE, nothing but average annual profit upon, by which method you are going to solve this? Initial cost. So here I will have initial capital cost. Just check how much you will be getting then. Correct. So 1,50,000 divided by initial capital multiply by 100. So 18 point, correct. 18.75%. Yeah. And one more thing I would like to say to you, please solve all these questions and please have a revision every day. I'm going to cover entire study text for you. As you already know, we have done in FR also. We have solved all the questions. Is it clear? So it will be very helpful for you. So you have to just cover exam kit later on. I will try to have solve few questions of exam kit also in the session. Okay. Chalo. So part B. So for part B, what all things are required then? Average capital investment. So what is the formula for this? What is the formula? Average capital investment.
Initial investment plus scrap value divided by 2.
Yes,
So initial investment plus scrap value divided by 2.
correct. So how much is the initial investment for us?
8 lakh plus
Initial
scrap
investment,
value.
correct. Plus scrap value upon 2. So initial investment which is given to you, that is how much? As you said correctly, 8 lakh plus 1 lakh divided by 2. So that gives you approximately. So देख लो ना, मैं lecture दे रहा हूँ. 4,50,000, correct? So what is the formula for us by the next method? That is ROCE is equal to average annual profit divided by average capital investment. So annual profit, we have just got the answer. Then we have 4,50,000. So what will be the final answer then?
33.3%.
How much? Yes, correct. 33.33%. This chapter is very easy. This is just a build up for you. Okay. So as we will move forward, little bit things will be added more. And the things which we are doing here, mark my words, I'm solving with you each and every step. So later on, when we will solve the huge questions, this big thing, this will become the small part over there. Is it clear? Okay. So what are advantages and disadvantages of this method? It was simple to calculate, yes or no? Links with other accounting measures. Links with other accounting measures means as we were solving, we were taking depreciation, yes or no, all that part. So it is having very less advantage, but it is having huge disadvantage. Like no account is taken in project life. Means Understand, if I'm earning 10% from a project, but what is the life of the project? How many till what period of time I'm going to earn? I don't know. Means that is not taken into consideration only. Is it clear? Next, no account is taken of timing of cash flow. Means when money is coming into the business, that is not taken into care. Is it clear? It varies dependent on accounting policy. Now, what type of accounting policy am I following? Because it is cash system or accrual system. Ignore working capital. Here we are only following when money is coming together, averagely annual profits. But your timing is not known to me. When I'm going to receive this money, is it clear? Why time? Acha, tell me why timing of cash flow is important in business. Why timing of cash flow is important in the business? Yes, can you tell me why timing is important? To calculate depreciation. No, I'm talking about cash flows. See, I should be able to know that I won't be able to default. Is it clear? Because I need my cash outflow when I have to pay to whom. Is it clear? How much I have to pay to whom? Am I clear with this? If, for example, after 3 months, I have to pay the principal of a loan which I have taken in the last year. Am I clear? So I know that after 3 months, I will be requiring this much cash amount. How much sales I'm going to do in that month, my projected sales. If there is a shortfall, so I have to arrange it through short loans, yes or no? So like this. Is it clear? Okay. Ignore working capital. Working capital means current assets, current liability, means say debtors and also totally ignoring it. It does not measure absolute gain. Absolute gain means it is not giving you a single signal that whether you should invest in this or whether you should not invest. It's just giving you a number. That means if you're investing, you are getting this much. Only that thing. There is no definitive investment signal. Yes, 100% go and invest in this project. So that it is not given to you. Is it clear? If this is clear, can we move ahead? Okay. So say it is given to you in exam. So yes, they can ask you questions. Huh? Don't think that it is not important. Theory is very, very important. As there are many practical things we are going to study. But please make sure theory is very, very important in this. Okay. Let's move ahead now. Advantages and disadvantages of ROC. So this is already given to you. I've already talked about this thing. You can easily understand. Now, first of all, tell me, what is the difference between accounting profit and cash flow? Yes, accounting profit and cash flow. Yes, I need answers. Cash flow is the inflow and outflow of the business, correct? So here we are not talking about profit. Means if you're doing any sales, take a reference of P&L account. So here you write basically sales from where you get the money, and here you write basically all the expenditure. So after that, what is left is your accounting profit. Whereas when we talk about cash flow, it is just a flow of money. Means when money is coming into the business and when money is going out from the business. So we are not subjected whether we are profitable or not. It is just a timing. So in this, what is important? In this, only timing is important. Am I clear with this? Correct? Okay. So in capital investment appraisal, it is more appropriate to evaluate future cash flow than accounting profit. So now understand, in capital investment is which type of investment I'm talking about? Capital investment means which type of investment? If I'm saying capital investment means which type of investment we are talking about? Yes, which type of, what do you mean by capital investment technically? What is capital investment all about? Yes, why no answers are coming? Yes, at least give it a try. How I can proceed further then? Yeah, process of investing money in long-term asset. Correct. So either it can be asset, yes, investment which is done for long period means either I'm having my investment in say fixed asset or some business opportunity wherein say like I purchase a land where I'm going to build hotel, yes or no, anything like that, or a plot of asset which I purchase, plot of land where I'm going to start with some industry. So their profit is not important. What is important? That this activity, how much it is going to generate future cash flow. So to evaluate future cash flow, then the accounting profit. So we are concerned with what? Future cash flow. So based on future cash flow, we are going to take decision today. Am I clear? So today you are, after your college, you are learning extra. Is it clear? You are enrolled for one more professional course. Am I clear? Why? Because you know what is the benefit of this course. Is it clear, everyone? So you're spending more time, you're giving exams, you are investing your time. Is it clear? Why investing your time today? Because you know somewhere or the other, after 5 years, this is going to make a big difference in your career. Am I clear with this? So same way in business, you are taking decision today based on what is going to be there in future. Am I clear? Yes, follow till here, everyone. Okay. So let's move further now. So cash flows and relevant cost. This is very important. for all methods of investment appraisal. Now, what is this cash flow all about, which you will consider as a cash flow? First of all, for all the methods of investment appraisal, means all the methods which we are going to solve, apart from this chapter also. In this chapter, we are going to learn two appraisal methods. Which are those? One is ROCE, which we have already covered up, correct? One is ROCE, which we have already covered up. Am I clear with this? Second one, which we are going to do, anyone knows the name? Just give me a second. Let me connect charger to a laptop. Yes, which one is the another method? Yes, go ahead. I'm listening. Yeah. Yes, which one is the another? Yes, correct. Payback. So this cash flow which we are going to learn, this appraisal method which we are studying is entirely based on not on profit, on future cash flow. Now, how this future cash flow should be? It should be futuristic. It should be incremental. Incremental means today if I'm earning $10,000, so next year $12,000, next year 15,000. Like this, it should be based on incremental and cash based. Cash based means money should come. It should not that like again after 1 year also money is going to come again next year after 3 years we are going to get the cash flow. No, this actual cash should flow in the business. And next is the opportunity cost. Opportunity cost means if I am doing work for you, that means I'm not doing some another work. That is the opportunity. I'm losing that time because I'm investing here. Am I clear? So that opportunity cost should also be part of your investment. Now, let me explain you with one more example. For example, if I am doing business, okay, I should get at least 1 lakh per month as a salary as per my qualification minimum. Is it clear? Now, if I'm doing some business, so I have to leave this job. Is it clear? So I will not get this money. So this is my opportunity which I'm losing. So I have to cover up this now in my business. Am I clear with this? In my cash flow. Got the idea what I mean to say? Clear with this? Now, which all things are ignored? Means in cash flow, you should not take these things. Number one, sunk cost. What is sunk cost? Which is already done, completed. For example, if you have purchased any product online, is it clear? You have just gone to the website, Flipkart, Amazon, you have purchased it. It is not, and you don't like the product, but you cannot return it because it does not have any return policy in that product. So that is a loss for you. Now you cannot do anything. Whatever is done, gone, that is gone. If I've done investment somewhere, now that investment is not fruitful. So what I can do? So think about future. That cost which is already gone, already incurred, no need to worry, that is already gone. So understood the sunk cost concept? Yes, understood with this? Okay. Committed cost. The word name itself committed means if I'm not earning also, na, I have to pay rent. I am not running a profitable business, but still I have to incur, but still I am going to incur rent expense. Correct? Am I clear with this? So that is committed costs. Then we have non-cash items like depreciation and all. Allocated cost. So any cost like, for example, you have kept a manager. So that is allocated cost. So that you have to pay. Clear with this? So got an idea? What has to be included and what not has to be included. Clear? Okay. So just read this. I'm giving you time. Because after this, we are going to solve this test to understanding number 3. The examples which I've given you for non-cash expense, all the funds. Yes, can we move ahead now? Clear? Sure. Let's start with this. A manufacturing company is considering the production of new type of widget. Every widget will take 2 hours to make. Fixed overheads are apportioned on the basis of $1 per labor hour. If the new widget gets are produced, the company will have to employ an additional supervisor at a salary of 15,000 at a salary of $15,000 per year. The company will produce 10,000 widgets per year. Am I clear? Yes, am I clear with this? Yes, can we move ahead now? Okay. So tell me which is relevant and which is not relevant cost. What are the relevant cash flow for us? See, fixed overheads. This will be classified under what? Allocated cost. Because this you have already allocated now. Fixed, whether you get profits or not, this is a loss for you. Am I clear? So this will not be part of cash flow. Committed cost. You have already committed. Our cash flow should be incremental or futuristic base. So next point. Our new wickets will have to employ additional supervisor at a salary. So this is a futuristic cost. If you are going to work, this cost will be incurred. Am I clear? And the company will produce 10,000 wickets per year. So for us, which is the main thing for where we have to understand cash flow. So for that, only one thing will be beneficial over here. That is what will be the answer? Only $15,000. This is the main thing for us. Am I clear with this? The rest we have to ignore. You can just read this solution small. Just read this. Clear? Okay. Once done, let me know. Then we will move ahead then.
तुम शादी देखो.
Yes, can we move ahead? Be quick. Okay. So now listen here. There is little bit issue from my side actually. Electricity has gone. It's raining heavily here in Mumbai, and inverter is also down. And my laptop battery is only. I have just connected to charger. It's only 6%. So what we can do? I will teach you. If electricity come, then it's okay. Otherwise, we have to stop the lecture. Okay? Is it clear? So let's move on with the payback period. Actually, I was about to give you break and we would have started with payback after 5 minutes, but I won't give you any break. Just pray that electricity comes. Chal. So let's start with the payback. Okay. So what do you mean by payback? Payback period is a time for a project which will take time to pay back the money. Means in short, if today I'm investing $1,000 in a company, if today I'm investing $1,000 in a company, in how many years I will get my $1,000 back? Is it clear? So payback period is the time of the project which will take to pay back the money spent on it. Correct? So if I am spending, say, $1,000, if I am spending $1,000, correct? In how many years this money will be paid back to me? That is number of years. So this entirely depend upon the cash flow. So here, what is the decision rule? Only select project which pay back within a specified time period. For example, I want my money as early as possible. So I am telling you there is a project A which give you 4 years time so that you will recover your initial investment. And there is another project which is giving you 5 years. So you tell me you're going to invest in which project? Project A or project B? In which project you are going to invest? Project A or project B? Yes, can I get the answers from you? Clear? Yes, which project you are going to invest then? Project A or project B? Please be quick. Battery is only 3% now. So tomorrow I will take attendance. Total 7 students are present. I know the names almost. So today I don't have a time to take the attendance. Tomorrow I will give you a sheet for attendance. You can just mark. Okay. Tell me which project you will invest. Project A or project B? In the less year, project A. Am I clear? Okay. So can